So today we'll be talking on the topic bank loans, the golden rules of fashion industry. Like I said earlier, fashion is not new to any one of us. We all know what fashion is. We see fashion everywhere and every day. And this is why fashion is very, very important and the industry is thriving. Now, let's look at fortunes through fashion and apparel business sector. We can actually see that it will surprise you to know that fashion and retail constitute the second source of global personal wealth, as over 10% of billionaires are involved in fashion and apparel, valued at about $3 trillion annually. And the reason for this attractiveness is not far-fetched, because from history, we have seen that the profit margin of this industry has been higher than most of other industries, especially at the retail level. And regions such as Euro and the Americas actually rank first position and second position respectively on percentage of fortunes generated by this industry, fashion and apparel. Now, okay, let's bring it down to Africa, especially our country, Nigeria. Do you know that Nigeria and South Africa actually constitute the largest apparel and footwear market in sub-Saharan Africa, which is valued at about 31 billion US dollars. And the textile apparel and fashion subsector actually remains the second largest contributor to Nigeria's manufacturing. It is about 25% of the country's manufacturing GDP and 2% of its total GDP, valued at about 2.4 trillion naira annually. Now, record has shown us that over 60% of products in this sector, however, consist of imported textiles and ready-to-wear apparel, worth about 4 billion US dollars, with up to 1.2 billion of second-hand clothing smuggled in and undeclared. Even to date, we still have it. All right, this industry is okay, it's important, it's big and large and all. It's also not without its own challenges. One of such is low disposable income. Now, this factor makes the fashion industry price sensitive, and most consumers are unable to afford what they want actually. Now, the second is the supply chain. The supply chain is generally weak, and the reason is because production at all levels is mostly done outside the country, and also because of the high cost of logistics of delivery services. Now, the third challenge that I can point to is poor consumer protection and quality standards, which actually leads to a high percentage of substandard goods in the country. Also, we all know this as it's a norm. The cost of doing business in Nigeria is generally high. Why? Because most times large overheads are related to income. So before an entrepreneur could cover its overheads with its income, it generally reduces the level of profit such person will be earning. But beyond all these challenges, the importance of this industry cannot be underemphasized. The first is entrepreneurship. Globally, most entrepreneurs are into the fashion industry, and it generates a high GDP. Now, employment. The fashion industry is actually a mass employer, because from the first aspect of agricultural production, like the cotton and all these things, to its raw materials, to the retailing of the finished items, where you go and you buy your items. Now, let's talk about diversity. Fashion employs the most diverse range of demographics, as we can see, including both genders and all age ranges, with each demographic categorization well represented. Fashion is for everybody, male and female, young and old, everybody. Fashion is for everyone. And international exposure, we all know this, and we know how well we celebrate. You know, when we see other people in other countries, display fashion and their culture and all. It's well celebrated, especially in Nigeria. Sorry. So fashion is an art that portrays cultural statements, actually, national identities, unique styles, and so on, that may attract international interest or bring recognition to individuals. Now, let's talk about the multiple value chain that fashion brings, why this industry is also important. The multiple value chain involves, okay, agricultural processing, raw material manufacturing, finished product manufacturing, distribution, retailing, and real estate. These chains, actually, these value chains employ so many people. So this thing called fashion is actually a very large one, and it accommodates many areas, as you can see. Now, all right, we've talked about fashion and all. Now, due to the economic importance of this industry, there is actually more credit dedicated to SMEs in fashion in Nigeria. Now we're coming to the credit available to the industry. Okay, credit for fashion in Nigeria is largely developmental. That is from development financial institutions and are typically at single-digit interest rates, e.g. 9%. Virtually all credit for fashion in Nigeria is administered by participating financial institutions called PFIs. Please, I want us to note PFIs because I'll be referring to participating financial institutions as PFIs going forward. All right, so these PFIs are actually commercial banks, and these commercial banks, they give out these credit facilities to the to fashion entrepreneurs. And these banks earn their management fees on credit from the DIs, that's developmental institutions, typically by adding to the interest rates, resulting in double digits, e.g. 12% to 15% interest rate. Okay, and because of this, the PFIs are responsible for losses, and losses in terms of bad debt, unrepaid loans, customers that default and all those things. So thereby they make up for this by making the criteria for accessing credit very stringent. Trust me, you can't go to any commercial bank and you feel, oh, I want credit, I want loan, and they just drop it on your lap. It has to be stringent. They have serious procedures which you must follow. Now let's talk about how to access these loans. Actually, fashion entrepreneurs find it difficult to access credit dedicated to the industry because of poor preparation and lack of knowledge of the requirement. Some people are not prepared early enough. And meanwhile, those that think they are even prepared early enough for this, they actually lack the information needed to see this through. And to successfully access credit in Nigeria for the fashion industries, okay, entrepreneurs must know or do the following. There is no how you can be successful at getting credit without knowing the following. So if you have a pen and a paper there, please, I would love if you can jot, or we'll make this available to you at the end of the session. First, utilize financial consultants. Utilize financial consultants. Don't be prudent with your financial consultants, okay? Finance is a specialist field, actually, and only financial consultants can explain the requirements of PFIs, the participating financial institutions, in layman terms and help you in preparation for accessing the credit. Okay, consultants utilized do not have to be expensive. Actually, they could even be free. If you have friends that are financial consultants, you make use of them. If you have family, you make use of them. Don't just keep quiet. It's credit, it's your money, it's business. So you need to get as much information as you can actually access. You understand me? So you have to utilize as many financial consultants as you can afford or are available to you. Diverse advice from here and there is quite good, and that is what you need if you need to be successful at this. Now, the second is for you to be prepared. We have talked about utilizing financial consultants. The second is for you to be prepared. That's the second point. You know, most of us in this country, what we do is that when it's not almost like when it's not almost the end, like when we don't tend to do things when we don't get to that desperate state. We just feel okay, maybe procrastination or maybe lack of knowledge make us feel like okay, maybe I'll do it again later and all those things. But no, you have to always be prepared. Like it said that preparation plus opportunity equals success. So that's how it is. You can't wait till when you are like desperate for it before you move into it. So most entrepreneurs try to access credit only when they need it. Finance will always be needed at every stage in your business. We all know that the thing that drives businesses in Nigeria is finance. Without finance, I really don't know where the business will be heading to. So you have to continually prepare yourself to access credit by continually engaging your financial consultants towards meeting the requirements of credit as of when required. Please let's be assured that the requirements of this credit will all know because it will be made available to us. So let's just keep following. All right, so the third point is for you to know your basic requirements. We have moved to knowing the basic requirements and to know if you are eligible or not, or when you are eligible, so that you would not waste your time, you will not waste probably the PFI's time and all that. You understand? So entrepreneurs will typically not be able to access credit for any of the following reasons. Number one, if you request for credit that is higher than the maximum approvable loan. Now you feel, okay, maximum approvable loan, how would you know? It's simple. Actually, the maximum approvable loan is usually between 8% to 10% of the total turnover of the customer payments into the bank account of the business over the last 12 months. Let me put it this way. The total inflow that has entered your bank account over the last 12 months. This is April 2020, right? So if you are preparing or you want to know if you are eligible for this, look at your total inflow from April 2020, backdate it to April 2019. All right. And the maximum allowable approvable loan actually is usually 8 to 10% of the total of that amount. So I hope you understand me and you are following. Because PFIs will typically not give loans beyond this amount. Everybody needs to be safe. And I'm sure the PFIs also, they want to be safe. So they won't give you something that you would not be able to repay. Now, another point is low years of business operation. Actually, many people do not know this, but let me chip this in that it's quite important for you to register your business as soon as you can, because they would make use of your CSC certificate and they start counting from the date, except maybe you can prove that, oh, I've been in existence, my business has been in existence before now, but it still doesn't rule the fact out that you have to register your business as soon as you can, okay? Because the minimum years of operation typically required by PFIs is 1 year. That's the minimum. Your business must have been in operation for at least a year. All right, so though PFIs, they might, in some cases, they may attend to businesses in operation for a period lower than a year. That is if the business has an unusually high turnover. Okay, because we all know that there are some businesses that in maybe 3 months or 4 months, they make almost times 4 or something of businesses that have been there in like 4 years. So it still depends, though it is not the standard. The standard is the minimum is 1 year operation. Do you understand? So the higher the credit required, the higher the credit you are requesting for, the higher the number of years of business operations that they will request from you or that they expect you to have. You understand me? So now another point of you knowing the eligibility and the requirement is presence of minors as directors. Most people do this. They feel, I want to put my children as part of my directors, my underage as part of my directors, and all. Fine, I'm not ruling that point out. it's fine. But if you'll be making use of credit facilities, which is one way that you can use to boost your business and make your, to ensure business growth. If you'll be doing that, trust me, PFIs need to hold people responsible for unpaid debt. Okay? And if they will be doing that, they would not want to give loans to people that are underaged. When you have directors that are underaged, they won't consider them fit to be able to take responsibility of repaying the loans. Do you understand? So that is one reason. This is one reason why some people get declined, and they don't know. They'll say, "Oh, I'm 5 years in business. My turnover is this. I'm this. I'm this." These are other things. Okay, they carry weight, so you must pay attention to them. Another thing is absence of equity contribution. What equity contribution means is that equity contribution is actually the amount sitting in your bank account as at the time of applying for the loan. Okay, and PFIs need to know that your business is generating cash. They need to know your business is generating cash, and it's not in a desperate state. It's not maybe crumbling anytime from now, and that's why you feel like, oh, let me just run to the bank and use loans or credit facilities to just boost it up and all those things. You understand? So they need to know that it's not in a desperate state. So they use a rule between 15% to 20% of the loan request in your bank account to ascertain if your business will be eligible or not. You understand? So I would advise that you apply when you still have cash, not after you have spent or invested it all and when you're in desperate need for cash. Now, another requirement or another factor to know if you're eligible or not is your age. For people above 65 years, PFIs they would not be willing to grant credit facilities to you. Okay, because they actually insure the debt provided against debt of the borrower on an annual basis. They also make use of insurance companies. Okay, and these insurance companies, they will not provide such cover for people above 65 years. So for it to be a win-win situation, you have to be at least before the end of the tenure, the person should not be up to 65 years, or even at the end of the tenure, the person should still not be up to 65 years. That's the only time when they would, consider you, because there's something called credit life eligibility. They will check it. So don't think that, oh, okay, maybe when I just tell them this, they will check it. They will make sure that everything is intact and it's, the standard. So another reason why some people might be considered ineligible is existence of bad debts. There are some people that, okay, for this business, you have incurred debt before. You've probably you've taken a loan from a PFI before, and which you did not pay back. Okay, so PFIs will not lend to businesses that have existing bad debts with other PFIs. So I think the first thing to do when you're thinking about, oh, my business needs a loan again and all those things, is for you to go back, focus on repaying your existing debt first before trying to get the new ones. And that another requirement and another reason why there are some other things you need to know. I'll continue the point. This is the fourth, is for you to know and have the basic documents. Some people do not know and some people do not have. While some people have and they do not know. You understand? So now for this point, entrepreneurs will typically not be able to access credit if they lack any of the following documents. These documents are important, please. In order to save your time and other resources, these documents are important. One, your bank statements and accounts. It would not be reasonable for you to just walk into a bank or make use of business consultants that know about this. For you to tell them that, oh, I need a loan, and your bank statement is not ready, or you can't even access your bank statement anytime soon. It's not reasonable, because PFIs will require your bank statement on all your bank accounts, okay, to calculate its turnover. What these do is that they typically will not lend to businesses who have personal accounts rather than business accounts. This requirement is more stringent. The higher the required credit. Okay, so now as the credit you require is increasing, just know that the requirements for it will also be increasing, but it's not something you cannot make available. You might even have it and you don't know. And this is why this webinar is here for you to know. Okay, so 1 year's bank statement may actually be okay for it, but the higher loan amount may need as much as 3 years bank statement. Okay, now the next is your business plan. Your business plan, people will feel like, oh, business plan, my business plan, oh, until it's maybe like 20 pages before I can communicate what I actually want. It might not be that detailed. It does not have to be so detailed and all. But the only thing it has to do is that it has to show the services and streams of income of the business. That is 1. 2, the plans and intentions of the business. Okay. Then 3, how much credit the business needs. It has to show that. They have to know. Then 4, intentions of the business, how much credit the business needs and what the business intends to do with the credit. You have to state it out, you have to explain to them, and it has to be reasonable. You understand? So you have to utilize a financial consultant for this, or a business consultant for this. You have to, for your business plan, because you might think, oh, I can come up with it, and you are not really giving the exact details of what they want. It's not really only in the number of pages, but what you have in there. You understand? So now that's another document, the business plan. We've talked about bank statements, we've talked about business plan. Now let's move to financial projections. That's the cash flow. Okay, this also does not have to be too detailed. What you just have to do is to show typical amount of income the business makes, its expenses, and the effect of the required credit on the income and expenses. How much comes in, how much is going out, and the effect of the credit on those two movements. Okay, so you have to utilize an affordable business or financial consultant for this also. You might not be able to do this on your own. You have to utilize someone that is an expert in that field. Okay, so your CAC documents are actually very important, because there are some people that come and say, oh, I have this, I've been in existence, I've done this, and truly their bank statement tells me that yes, they are doing well, but they don't have CAC documents to show for it. What does this mean? This means that they don't have proof of registration. So how do you want the PFI to believe you that, okay, this business is actually in existence and this is what they are doing? You understand? So no PFI will provide a business loan to an unregistered business. Okay, so and another part of it is that limited liability companies are actually able to access more credit than sole proprietorships or partnerships. We know the reason. They have allotment of shares, they have directors, you understand? So I believe the risk can be shared. Okay, now so you have to upgrade your business type to limited liability. The higher the credit the business needs. This is not, I'm not saying, oh, it's compulsory, just go and update, then everybody just run to, oh, I want to go and update to limited liability. No, you know how much credit your business needs, and you cannot be too sure. That is why it is better for you to engage the services of a business or financial consultant for this. Okay, yes. So the next is security or collateral. We all know that banking system, actually, this thing called loan or credit, you need to like put something like more like, oh, I'm putting this in place in case this and this happens. You understand? And so if the security requested for is for a personal guarantor. There are some that they will tell you when you explain to the financial consultant, they'll tell you that, okay, what you actually need for this tier of loan is not collateral. You don't need to bring an asset or anything. What you just need is a guarantor, a personal guarantor. That's an individual that will stand and guarantee you for the loan or the credit you are requesting for. You'll be given some forms. Now, these forms must be filled and signed by the guarantor. You don't do that on behalf of the guarantor. You give it to the person to fill and sign it. Now, smaller loan amounts actually can utilize guarantors to access credit. For larger loan amounts may require a corporate guarantor, typically a limited liability company, maybe of your type, another limited liability company guaranteeing you, okay? Or collateral. All right, collateral can come in various, we have property, we have industrial equipment, we have cash, we have shop, you know, but typically collateral is like, if you'll be using equipment like heavy machinery, those machineries should not be older than 2 years. We all know that depreciation sets in. So it should not be older than 2 years. Properties, if you are using properties, landed properties, houses, buildings and all those things, sorry, they should be located or situated in urban areas, okay? Or cash deposits. Maybe cash deposits are more than 125% of the credit required. You understand? So all collateral provided must have the necessary proof of ownership documentation. Ownership documentation, so that you won't start by engaging financial consultants. You move on to getting your bank statement. You move on to your business plan. Your business plan is perfect. Your financial projection is perfect. Your CSC is perfect. Everything is now perfect. Only for you to say, okay, this loan, from time you would have been informed that this loan you are requesting for needs a collateral. Then you tell the person that, oh, fine, I have a land in this. I have, okay, proof of ownership. Then story will start. That one is not possible. If you want to like access this credit facility, if you want it to be, you know, if you want to make sure that everything is in place, is also in place, okay? And that's that about the document, okay? That's that about the basic documents. Now we'll be moving to the final lab where I'll be concluding, and after we'll take about 2 to 3 questions while others will be responded to via mail. All right, so in conclusion, commercial banks and other financial institutions have a lot to lose if debts are not repaid, okay? And as a result, they place very stringent criteria for assessing credit, even when the credit is obtained from developmental financial institutions that promise low eligibility requirements for fashion entrepreneurs. They are still stringent, all right? And as a result, business owners should please stick to the following rules of thumb. One is for you to utilize financial consultants, as I have explained earlier, okay? So engage several advisors. Talk to people about it. People that you feel that they are knowledgeable and can give you right information, not those that will dissuade your mind, you understand? So you have to engage several advisors periodically on accessing credit towards preparation. They know better, actually. Then secondly, ongoing preparation. Please do not wait till your business is screaming for help. Finance is needed at every area. You want to buy more machines, even when you are still okay, finance is needed. You need to bring in more ants, finance is needed. You need to do whatsoever, name it, finance is needed. That is what the company actually thrives on. That's what it feeds on, that makes it grow, finance. So this means that you have to treat assessing credit as an ongoing activity. Do not apply only when you need the credit. Apply when you are prepared to access the credit. Do you understand? Now, okay. Also, for you to know the basic documents, I've listed the basic documents for you. Bank statement of account, the business plan, the CAC, the security or collateral. Yeah, there, I've listed it. All right. Know them. Do not apply first without knowing and meeting the basic requirements. You can speak with your financial consultant on this. Okay. And you have to have the basic requirements or the documents. It's another thing for you to know. It's another thing to have. So please have these requirements, okay, that are required by this financial institution, so that at the end of the day, you will not spend about 3 months or more than that, or maybe less, trying to access this facility. And at the end of the day, you just hear that, oh, maybe because of something that if you had started that 3 months ago, maybe by now you'd have gotten it done. So now that you need it urgently, you just put everything together and that's it. Nothing is stopping your loan. If you have everything they require, then you are good to go. Nothing is, you are not being stressed. You are not stressing them, and you're not stressing the consultant. So everyone, you know, everyone is happy and fine. All right, so that brings me to the end of the presentation. Yes, you can. You can walk down to your bank and ask for the loan. Okay, that's if probably you know your account officer or anything. Yes, you can do that. But in order to, you know, to be, you can never be too sure. But in order for you to be so sure of what you are going into, all right, so that you will not waste your time, your resources, and many other things, is for you to actually work with business consultants in this line. Do you understand? So you can actually access the loan. Yes, you can access the credit anytime. And how to do this? For example, okay, let me take, you're coming to ESG, all right? You probably go to the website. There are many services there that you can choose from what you actually want. Then you click on loan facilitation. What loan facilitation will be doing for you is to tell you, is to, okay, you get your information, then a consultant will contact you. Do you understand? Then from there you talk. You might not even be there in person. Everything can be done online. And if you still want to come to the office, fine. The office is there available to welcome you. All right. But to do this, you have to let the person know how much you'll be willing, how much you are willing to probably request for, the documents you have available, information that if you have a business plan already, you have to bring it with you, and some other things. Do you understand? So about walking into the bank, you can, but for you to be, should I say, more sure of what you are doing, so that you will not be wasting your time, information is very important. It's for you to go through a business consultant first, or a business consultancy firm. Do you understand? So that's that. Now for Ojobara or Ololade, are there specific banks that give loans? I think, to me, I believe many banks give loans, like these commercial banks. They are the PFIs, just like I explained earlier. And they give different type of loans, different types of loans. Some give loans to women, like WPAR, we're in partnership with Access Bank on WPAR loans. Some give loans to women, some give, they are just numerous, trust me. So for you to know, maybe there are specific banks that give loans, I think these commercial banks give loans. You just have to probably go to their site and make your inquiry about the exact bank that you want to get the loan facility from. Because trust me, some banks will give this kind of loans, while others will not give that same loan. So you have to know the specific one your business needs. And that is why I would advise that it is better you work with a business consultancy firm to know the specific one your business needs, so that you don't waste your time. You don't waste your, even when you go for a loan that probably that's not what your business, you have to pay back. And maybe paying back that kind of loan will be the one threatening or frustrating your business. You don't know. So for you to have access to all this information, you have to engage the services of a financial consultant.